Hello guys, and welcome to my YouTube channel once again. So I took a nice trade, about two trades here on this particular pair, volatility 25 1S index. All right, and it gave me some massive profit, some good profit on the two different trades. All right, so I wasn't chance to do any videos, so I decided to do the video today so you can just learn from it and also try to implement what you're going to learn from this video. All right, it's very similar to that of the last video I posted, I shared here on this channel. All right, so the first thing I had to do was just to come to the daily time frame as usual. All right, the daily time frame as usual, and look at the what the market is actually doing. As you can see, the market is currently bullish, and it is almost at where we have the current price. You can see there's a strong resistance zone, support zone. The market had been buying from. We have the current price. I mean this right here, market bought and also bought here. So the market is around there, and it looks like the market wants to reverse or wants to retest that zone, then continue buying to the upside. All right, so we can't confirm that yet, although the structure seems to show that. All right, so I'm not really interested in that because it's on the daily time frame. Since I don't swing, I don't trade swing. All right, so what happens here is let me even show you guys these things. You can be practicing this thing and make some good money. There are so many videos on YouTube which you can use to learn a whole lot of stuff, including the daily candlestick, which I've shared with you guys once on this channel, using the daily candlestick bias and the candlestick sweep. Yeah, I call it candlestick sweep. I don't know, whatever you like calling it. What I mean is this: like if you look at this chart right now on a daily time frame, you can see that the market, this particular bullish candlestick closed, left a wick at the top. Then the next day's candlestick formed, then dropped a wick at the top, which swept the wick of the high of this the previous day's candlestick, and the body was still down here. All right. Then the next candlestick that followed is where you'd get an entry. You get an entry on the next day's candlestick. All right, so let's say this happened yesterday. Okay, this happened 2 days ago. Then yesterday this one happened. So the current day, what you do on the current day is just quickly take a horizontal line, place it at the top where you have the close of this candlestick, the close of the previous day's candle, this particular week here, where you have this week, it indicates a strong resistance zone. It indicates a strong resistance zone. And secondly, when you have this on the chart, especially on a higher time frame, there is a very high chance the market is going to be selling. The current day, this is the previous 2 days, this is yesterday, then the current day will be selling nicely. I'm taking this to be the 2 days candlestick. Then today, yes, this one is the yesterday's candlestick, and this is the current day. I'm not talking about this one yet. All right. So once you see this, if this happened yesterday and this happened 2 days ago, note that the market on the current is going to be selling. But where it's going to start selling is what you may not know, guys. It's a very simple approach to trading, and it's giving massive profit if you can understand it. And also, this is happening on a strong zone because you can see the market has been consolidating here. You can see this. All right, so after placing this horizontal line just at the top of this high, then all you need to do is to wait for the market to try to buy to this trend line, or you go to a lower time frame to look for a structure that confirms the market is actually going to buy. All right, for example, you can go to the 1 hourly time frame, then you try to trace where you marked that zone. You can see here, guys, you can just see this right here. This actually head and shoulders pattern. You can this is where we marked. This is the previous days, that bullish candlestick that left a wick. Then this is the wick of the candlestick that swept that bullish candlestick, and this is the current day here. You can see the market had to buy to that zone, then it started selling. This is on the 1 hourly time frame, and you can see it formed the head and shoulders pattern. This is the left shoulder, this is the head, and this is the right shoulder. Then it sold nicely. It sold nicely throughout yesterday. And mind you, this is actually a volatility 25 1S index. You know what it means. If you can get a good entry on this particular pair, it is maximum profit. You make so much profit from this particular pair because it's very volatile. But if you are unlucky, you take a wrong entry, it can wipe the whole of your profit if you're not careful. All right, so you can see how it works. It's very simple. The market had to buy to this zone, then started selling. All right. So with my, I believe my students will know what to do. Even on this one late time frame, you will know where to enter, because first of all, we have a bullish engulfing candlestick pattern here. And you know what happens when we have a bullish engulfing candlestick pattern that approaches a zone like this. All right. And also, if you look again, let's check. Okay. Let's check the 15 minutes time frame and see what would have still happened. Okay, you can see on the 15 minutes time frame, you can see the market started, you can see nice, the market started buying, creating impulsive, some kind of corrective buys, creating higher highs and higher lows. Then on getting to this zone, you see when it started rejecting on this 15 minutes time frame, you see all these activities here. Very clean entry opportunities for my students who understand my entry secret. All right, so you can see this very nice opportunity. You enter here, then you sell the trade down, just sell down. When you are selling, do not be scared of what you're seeing on the 15 minutes time frame. Remember what you saw on the daily time frame, because the market will most likely sell down to where we have the week of this previous days, can this particular candlestick, the market will most likely sell to this zone. So on daily time frame, you would want to target this zone somewhere here, so anywhere around this zone, then you allow it to run. Don't really monitor it on the 15 minutes time frame, else you might be tempted to close your trade when you see some little pullbacks that will occur. All right, because pullbacks are inevitable. Market cannot move straight, you know that. All right, so you see that how it works. With this same simple strategy, you will have so many opportunities to trade. You have so many opportunities to trade. If you check on different pairs, if they just check on different pairs, you will see that you have so many opportunities to trade. At least one setup in a day, you'll be finding it. You can also find this particular setup on the 4 hourly time frame, even on the 1 hourly time frame. If you find it on the 4 hourly time frame, you can still go down to the 15 minutes time frame to get your entry. You find it on the 1 hourly time frame, you can still go down to the maybe 5 minutes time frame or the 1 minute time frame to get an entry and also trade. All you need to do is just find where there was a sweep, then you mark the high, then you go to that lower time frame to check the structure of the market, if it is giving you signal that it's going to buy or it's going to sell. You know, if it gives you a confirmation it's going to be buying towards where you expect it to get to, then you know, you just wait for the market to get there. Once you get there, you get an entry, then you enter your trade and make some good profits. Don't be scared, guys. All right, so that's just it, by the way. So this is where I took the first trade I mentioned earlier. All right, so I took the first trade around this spot. Let me point. All right, so I saw this, I think, on the 4 hourly time frame. Let me quickly go to the 4 hourly time frame. I just about be able to identify this spot on the 4 hourly time. Let me just use something to mark out this area. All right, so on the 4 hourly time frame, I noticed something like this. I noticed the sweep there, and there's this structure right here that gave me an idea the market's actually going to sell. I saw this, actually there was a sweep, like you can see the market created a higher high with the wick at this point, then it sold. Then before this sells, if you go down to the 1 hourly time frame, let's go to the 1 hourly time frame. I think the structure was even better on the 1 hourly time frame. Let's go to the 1 hourly time frame. Okay, perfect. All right, so I saw this setup right here on the 1 hourly time frame, and this is a double top, as you can see right here. This is a double top. I noticed this was a double top. Then all I had to do was just to, and the market was somewhere around here when I saw it, I think so. Then I had to just mark out the neckline to wait for the market to break and close below it, so I can easily enter a trade, because I knew the market would want to, after, if it closes below this zone, then it's going to be selling to where we have this structure, to where we have this structure. One moment, let me confirm where I actually took that trade. Let me check the 15 minutes time frame. Let me check the 15 minutes time frame. Okay, one moment, guys. So you can see I entered the trade right on the break and close below the neckline. So I quickly entered the sell trades. I entered multiple positions at that point, and you can see the market sold, and my TP was somewhere around here because I knew the market would be targeting this support zone around this point, so it gave some massive profit, you know. Then I closed the trade somewhere around here. Then while I was closing the trade, usually we'll expect the market to actually do a kind of a retest on the neckline to continue selling. but the structure the market created also confirm it actually going to be buying to this zone for a retest. The market showed that. So on this 15 minutes time frame, that was where I took the second trade. I think that's where I took the second trade. Yeah, I took the second trade at that point. Let me just trace it. Let me trace it. I took the second trade at that. Okay, no, I didn't take the second trade there. All right, I didn't take the second trade there. You can see on the screen. You can see on the screen. All right, so that's where I took the first trade. Then the second trade I took was here. All right, so when I noticed that the market, after creating this structure here, after buying, it went above this high, this zone, which I expected to come to do a retest, then sold, created this, then sold down to this zone. At this point, I was thinking it's going to break this particular pattern, this level here, but it did not break this level. So it started buying again, and the buys made me to feel the market was actually going to sell to the downside. If you understand our continuation strategy, you notice that the market you mostly want to sell after um, creating this kind of structure, because on the 5 minutes time frame you'll be seeing higher highs and higher lows. All right, so but that did not happen. So all I had to do was to go down to the 5 minutes time frame to get that structure clearly. Let me go to the 5 minutes time frame. All right, let me go to the 5 minutes time frame. I just will be able to trace where that structure is. Okay, yeah, look at it here. So I drew my, sorry, that's not the trend line. What I did was to draw the trend line. I drew my trend lines, and also a moment, you duplicate it to make the pattern look good. All right, so you can see what the market did. So I was actually expecting the market to sell to the downside, and in fact I have lost a couple of trades here at this same spot while the market was forming this structure, because I was thinking it was going to sell. I entered the first trade around this point, so the market did not break out. I entered the second time, it still kicked me out, so I waited. So when I noticed the market was actually buying, I waited, it broke above, then came back. Then on coming back, you can see the pattern the market was creating on coming back. See the pattern the market was creating. So on breaking out of this trend line and closed above it, I knew the market was actually going to buy. So I only waited for a retracement to this line. So I entered the trade. I think it was just around this spot where I entered the trade, and then it bought massively. All right, and as you can see, if you go to the 1 minute time frame, you will notice that this structure at this point, this structure here, you can see the market selling at this point. It means the market was creating lower highs and lower lows on the 1 minute time frame, which will be kind of correction, a corrective move for the market to continue buying. All right, so you can see the massive buys the market did, and it made some massive profit from this particular setup. From this particular setup, yes. All right, so it's very simple, guys. It's very simple. All right, remember the first setup I got was this market breaking out of this neckline at this point, the market breaking out of the neckline and closing below it. Then I got my first entry here, got my first entry, and then sold the trade nicely with some good profit. Then the next was somewhere here after the market did not break to the downside, it broke above, then came back to do a retest on the line. Then I took my trade, and you see some massive profit. These things happen regularly on the chart. They happen every day. So I've been able to show you guys two simple ways, because you can use the daily time frame directional bias to trade, or to get some perfect, or let me say very good trades setups and entries. Or you can use these ones. This one is basically using chart patterns, like the head and shoulders patterns, the double tops, double bottoms. If you're able to identify them, know where the neckline is and what is possible, guys, you will make some good profit on the market on a regular basis, even if it's not every day. Mind you can find these patterns on different time frames, but if you can find them on a higher time frame, it increases your chances of making getting some high probability setups. If you can find them on higher time frames, all right, it is very nice. And I think, one moment. So I have a trade that is currently running in some deep profits with just this, almost the same setup. That's in crash 500 index. Let me quickly check crash 500 index. All right, so you can see this one is head and shoulders pattern. Head and shoulders pattern, you can see here. You can see the market, but it broke through if you draw a trend line, you can see there was a breakout and then the retest. On retesting to form the right shoulder, then I entered the trade at this point. You can see it sold, pulled back, now it's trying to pull back again. And this is my TP, 255 US dollars. So that's how it is. It's very simple, guys. It's not difficult. It's very simple. You can be making some profit, good profit every day. Even with just one good trade setup per day, you'll be making some good profits, guys. All right, so that's just try to practice these things. Click the link in the description to join my channel. And if you need a one-on-one mentorship to learn my analysis and the way I trade, it's for your own good, guys. Send me a message when you get to the channel, Telegram channel. You'll find my direct contact. Then we can start from there. All right. So please like this video, subscribe to this channel, then share your thoughts in the comment section. See you in my next video. Stay blessed and peace out.